Welcome to another deep dive, and today we're taking a look inside the House of Money
Ah, yes. Inside the House of Money, a great book.
by Stephen Drobny. It's a fascinating look into the world of global macro trading.
Yeah, a world that most people, I think, don't really understand.
It's kind of shrouded in mystery, right?
Very much so.
These hedge fund managers making these massive bets on, global economic trends.
Yeah. And we'll talk a little bit more about what global macro is, but it's these big swings, these big trends that some people are able to make a lot of money off of.
And it's not for the faint of heart, that's for sure.
No, it's a high stakes game.
But what's really cool about this book is it's not just a textbook. It's a collection of interviews with some of the biggest names in the game.
Right. So we get these firsthand accounts from people who are actually out there doing it.
We hear their stories, their strategies, their wins, their losses.
And their mindsets, the way they think about the world.
And this is a world that's very different from how most of us see things.
I think so, yeah.
So just to set the stage a bit, maybe you could give us a quick rundown of what global macro trading actually is.
Yeah. It's about understanding the big picture.
Okay.
It's not about picking individual stocks. It's about spotting those large-scale economic shifts,
Okay.
whether it's currency swings, interest rate changes, commodity prices, political upheavals, all of that kind of stuff.
So it's about understanding how all these global pieces fit together and making bets on where it's all heading next.
Exactly. It's like putting together a giant jigsaw puzzle.
And when you get it right.
Yeah, you can make a lot of money.
So let's talk about Stephen Drobny, the guy who wrote this book. Who is he, and why did he decide to write Inside the House of Money?
Yeah. So Drobny, he's not just some journalist or outsider. He's deeply embedded in this world of hedge funds.
Okay.
He actually runs a research firm that's known for these exclusive gatherings of top hedge fund managers.
Oh, so he's got his finger on the pulse.
Very much so. And I think that's what makes this book so valuable. He's not just reporting on what he's read or heard. He's talking to these guys directly.
He's getting their unfiltered insights.
Exactly. And I think that's what comes through in the interviews. You get this sense of intimacy, like you're sitting in on these private conversations.
It's like eavesdropping on the masters.
Yeah, exactly.
And the way he structured the book is also interesting.
Yeah, it's not a straightforward narrative. It jumps between these in-depth interviews, which keeps things really engaging.
So it's like we're getting different viewpoints on similar concepts.
Right, we get to hear how different traders approach the same problem, and there's some pretty big names in there.
That's what I'm excited about. We're talking about guys like George Soros.
Yeah, the guy who broke the Bank of England.
Exactly. We're also going to hear from Jim Leitner, who has this really interesting approach to global macro that he calls global micro. And then there's this anonymous family office manager who talks about managing wealth for the long term, not just chasing those quick returns.
It's a really diverse group of people, and I think that's what makes the book so fascinating.
So let's dive into some of these individual stories and see what we can learn.
Yeah, let's do it.
To kick things off, I think it's helpful to understand the historical context. Where does global macro trading come from? Where does it fit in with the broader history of financial markets?
It's interesting, right? Because global macro might seem like this modern invention, but it actually has roots that go way back.
Okay.
And one of the most surprising figures in that history is John Maynard Keynes.
Keynes, the economics giant. Didn't realize he was also a trader.
Yeah, what's fascinating about Keynes is that he wasn't just a theorist. He was a practitioner, a trader himself.
And so he put his money where his mouth was.
Absolutely. He managed a college endowment and made a killing in the markets, applying his economic insights to his investments.
So he was like an early global macro trader.
In a sense, yeah. He understood how to connect the dots between economics, politics, and financial markets.
That's pretty cool. Yeah. But let's fast forward a bit. When did global macro trading really start to take off as an industry?
Well, for that, we need to jump ahead to the 1970s and a firm called Commodities Corporation, or CC for short.
Okay. Tell me about them.
This was like the original hedge fund incubator. Some of the biggest names in the industry, guys like Bruce Kovner and Michael Marcus, got their start there.
So what made CC so special?
They fostered a culture of risk-taking and leverage. They weren't afraid to make big bets.
Sounds like my kind of place.
But they also emphasized global thinking. They saw the whole world as their playing field.
That's a key element of global macro, even today.
Right. And CC was really at the forefront of that.
So CC laid the groundwork, but it was really the events of the 80s and 90s that shaped the global macro landscape as we know it today, right?
Yeah. We're talking about things like the 1987 crash, the Asian financial crisis, the Russian default, the LTCM collapse.
Those are some wild times.
They were defining moments for the industry, moments that tested even the most experienced traders.
It's like a trial by fire.
Exactly. And the ones who survived, the ones who learned from those experiences, they became the legends.
So we're going to hear stories about how these traders navigated those crises, what lessons they learned, and how they adapted their strategies.
We're going to get a front row seat to some of the most dramatic moments in financial history.
And we'll hear about the rise and fall of some of the biggest names in the game.
The wins, the losses, the triumphs, the tragedies.
I can't wait to dive in.
Me neither. Okay, so where do we even begin? There are so many fascinating interviews in this book.
I know, right? So many big names, so many different approaches.
Well, we talked about Jim Leitner earlier, right? The global micro guy.
Yeah, the one who combines top-down macro analysis with bottom-up stock picking. What does he have to say?
His interview is packed with insights. I mean, he talks about how he used to dominate trading in the Venezuelan bolivar.
Really?
Yeah. And the Mexican peso, too, simply because he had better information and a wider network than anyone else.
So it's not always about being the smartest guy in the room, right? Sometimes it's about being the most connected.
Exactly. It's about knowing where to find the information that others don't have.
That's a good lesson for anyone, really, not just traders.
And he's also very honest about the fact that he's never been able to predict who's going to be a successful trader.
That's interesting. You'd think someone with his experience would have figured that out by now.
Right. But he acknowledges that trading success is this complex mix of skill, temperament, and a bit of luck.
Yeah, you can't teach someone to have the right instincts. You either have it or you don't.
Right. And he also talks about how important it is to be unemotional about numbers, especially when it comes to losses.
That's got to be tough, right?
It is, but he says losses are inevitable in this game. You can't let them paralyze you.
You have to be able to move on, learn from your mistakes.
Exactly. So he focuses on those risk premia, looking for currencies that are mispriced or more volatile than they should be.
Okay, so walk me through that a bit.
Yeah.
What exactly is a risk premium?
It's basically the extra return you expect to get for taking on more risk. So, for example, if a currency is expected to be very volatile,
Right.
you might demand a higher return to compensate for that risk.
Got it. So Leitner's looking for situations where that risk premium is out of whack, where he can get a higher return than he should be getting for the level of risk he's taking.
Precisely.
Okay, that makes sense. So let's move on to this anonymous family office manager. I'm curious to hear their perspective because they're managing wealth for the long term.
Yeah, it's a completely different mindset. This isn't about chasing those quick returns. It's about preserving and growing wealth over generations.
Right. So how do they approach portfolio construction?
Well, they divide their portfolio into 3 buckets. They call it systematic, absolute return, and thematic.
3 buckets. Okay.
So the systematic bucket is all about capturing consistent returns through strategies that exploit those risk premia we just talked about.
Okay, so that's kind of the steady Eddie part of the portfolio.
Exactly. Then you've got the absolute return bucket, which is where they get to be more opportunistic.
Okay, so that's where they swing for the fences, so to speak.
Yeah, they're looking for unique and uncorrelated strategies that have the potential for big payouts. And then finally, you've got the thematic bucket.
Okay, tell me about that one.
That's where they express their long-term views on major global trends. So, for example, if they believe that China is going to continue to grow rapidly, they might allocate a portion of their portfolio to Chinese equities.
I see. So it's about making those big directional bets on the future of the world.
Right. And what's interesting is that they actually share some stories about their most successful trades, like buying puts on gold in the late 90s.
When everyone thought gold was dead.
Exactly. And shorting the Japanese yen in the early 2000s when the Japanese economy was struggling.
Wow, those sound like some contrarian bets that really paid off.
They did. And it's a good reminder that sometimes the best opportunities are the ones that everyone else is ignoring.
All right, so we've heard from someone who's playing the long game. Now let's shift gears a bit and talk about Christian Sivajathy. He's a prop trader, right?
Right. He was a prop trader at a big bank, which means he was trading the bank's own money.
High stakes.
Definitely. And he has some incredible stories about navigating major market events, like the '94 bond market turmoil we talked about earlier.
That was a tough one for a lot of people.
It was. And he learned some hard lessons about risk management and the importance of staying humble.
You mentioned that he got burned by illiquidity in that bond market crash.
Yeah.
What exactly does that mean?
So illiquidity basically means you can't buy or sell an asset quickly without affecting its price. So imagine you're holding a bond
Right.
and you need to sell it quickly, but there are no buyers.
Correct.
You're forced to lower the price until someone's willing to buy it.
So you had to take in a big loss.
Exactly. And that's what happened to a lot of people in '94, including Siva Joffe. He also has some strong opinions about central bankers.
Oh, does he?
He does. He believes they've created this false sense of security in the markets.
This idea that the Fed will always bail us out.
Exactly. The Greenspan put, as they call it.
And he thinks that could lead to some nasty surprises down the road.
He does. He thinks we could be in for a rude awakening when that safety net disappears.
It's a sobering thought. So what else does Siva Joffe have to say?
He also emphasizes the importance of staying unemotional about trading and not letting losses cloud your judgment.
Easier said than done.
Right. But he also warns against overtrading, trying to force trades when there are no real opportunities.
So patience is key.
Absolutely. Patience and discipline. Now let's move on to Desmond Lackman, the researcher.
What's his story?
He has this really fascinating approach to finding hidden gems in the market.
I'm intrigued. Tell me more.
He reads everything he can get his hands on: newspapers, magazines, academic journals, independent research reports. Then he compares that information to market prices and sentiment, looking for discrepancies.
So he's like a detective, piecing together clues from different sources.
Exactly. He believes that markets are often driven by herd behavior, and that being able to identify when the crowd is wrong can lead to profitable opportunities.
I can definitely relate to that. There are times when I feel like everyone's chasing the same hot stock or trend, and
You just wonder if anyone's actually looking at the underlying fundamentals.
Exactly.
And Lackman's all about challenging conventional wisdom and thinking for yourself.
Love it. Speaking of challenging conventional wisdom, let's move on to Peter Thiel, the tech entrepreneur turned global macro trader.
Right. He co-founded PayPal and was an early investor in Facebook.
He's seen it all in the tech world.
Yeah.
What made him decide to jump into global macro?
Well, he's always been drawn to contrarian thinking, and he believes that global macro offers more opportunities to exploit market inefficiencies. He calls them anomalies.
Anomalies. So he's looking for situations where there's a disconnect between market prices and underlying fundamentals.
Exactly. And he's not afraid to bet against the crowd, even when it's uncomfortable.
So where are some of his big bets?
Well, he's been short the Japanese yen for years, based on his belief that the Japanese economy is structurally flawed. He also thinks there's a bubble in hedge funds.
Too much money chasing too few opportunities.
Right. And he emphasizes the importance of mental flexibility, being able to adapt your strategy as conditions change. And strong risk management too, of course. Now, let's talk about Yara Harris, the floor trader.
He seemed pretty concerned about the state of the market.
He is. He's a veteran of the Chicago Mercantile Exchange, and he's seen it all. He believes the biggest change in global macro has been the shift from bank loans to hedge funds as the primary source of global financing.
So he's saying that hedge funds have become the new power brokers in the financial system.
Exactly. And he worries that this concentration of power, combined with excessive leverage and complacency, is setting us up for a major correction. He's particularly bearish on the US dollar.
What makes him so pessimistic about the dollar?
He sees a number of factors at play, including the growing U.S. trade deficit, the rise of China, and a potential loss of confidence in the U.S. as a global leader.
Interesting. He's a bit of a doomsayer, but I wouldn't dismiss him entirely. What else?
He's also a big believer in understanding market psychology, how emotions like fear and greed can drive irrational behavior. Okay, let's switch gears again. Let's talk about Dwight Anderson, the commodity expert.
Commodities. Always a wild ride. What's Anderson's approach?
He's known for his deep dive research. He doesn't just rely on market data. He talks to industry insiders, visits production facilities, pores over company filings. He wants to get an edge.
He doesn't shy away from doing the work.
Not at all. He believes it's crucial in today's markets. Information is everywhere. Competition is fierce. You have to find a way to differentiate yourself. And he really stresses diversification, spreading your bets across different commodities and different trading strategies.
Don't put all your eggs in one basket. Solid advice.
Right. And of course, risk management, always having a stop loss in place. Now let's talk about a very different perspective. The anonymous stock operator who transitioned from short selling to a long-only approach.
That's quite a shift. What prompted that change?
He started his career at Chanos & Company, a firm known for its successful short-selling strategies. But he eventually realized that being a dedicated short seller can be incredibly challenging, especially in a bull market.
You're always swimming against the tide.
Exactly. So he switched to a long-only approach, but it wasn't easy. He had to unlearn a lot of the habits and biases he'd developed as a short seller.
I can imagine. What were some of his key takeaways from that experience?
Well, he talks about risk management and staying unemotional, but he also learned a lot about how to identify and exploit market bubbles. He says the key is to look for situations where valuations are totally detached from fundamentals, and everyone just believes prices can only go up.
That this time it's a different mentality.
Exactly. And then you have Marco Dmitrievich, the founder of Everest Capital. He's a true pioneer in emerging markets investing.
Oh, emerging markets, high risk, high reward. What's his take on that space?
He believes they're still compelling, but you have to understand the risks. You have to understand the local markets, build relationships with local partners, be patient and disciplined.
So it's not just about applying the same strategies that work in developed markets. You have to adapt.
Precisely. And he stresses diversification, understanding the political and economic risks. He shares some great stories, too, like buying Pakistani equities after the U.S. invasion of Afghanistan.
Wow. That's thinking outside the box.
He also made a lot of money investing in Chinese companies during their rapid growth phase. Now, let's talk about a completely different approach. David Gorton and Rob Standing. They're the quant guys who founded London Diversified Fund Management.
Quant traders. Always fascinating me. What makes them stand out?
They blend quantitative analysis with fundamental research. They use complex models to identify market inefficiencies, but they also spend a lot of time understanding the economic drivers behind those inefficiencies.
So it's not just about crunching numbers.
Yeah.
They want to understand the why.
Exactly. And they're extremely disciplined about risk management. They have a hard rule that they will never lose more than 5% of their capital in any given year.
That's impressive. How do they pull that off?
Diversification, leverage management, and a long-term perspective. And they're not afraid to admit when they're wrong. They talk about how they misjudged the timing of a correction in the Japanese government bond market, which led to a pretty big loss.
Happens to the best of us.
Right. All right, let's move on to the anonymous currency specialist featured in the book. He talks a lot about volatility trading, which is notoriously difficult.
Yeah. Volatility is tough to predict and even tougher to profit from.
Well, he believes the key is timing. He says it's like the way a great athlete seems to have more time than everyone else. You just have to sense it.
So he's looking for those subtle shifts in market sentiment that signal a big move is coming.
Precisely. And he's also skeptical of all the information that floods the market every day. He basically says most of it is noise, and relying on other people's opinions is a recipe for disaster.
I can definitely relate to that. There's just so much information out there. How do you even filter it all?
He focuses on price action, the actual movements of the market, because he believes that's the most honest reflection of what's really happening.
Interesting. So he's not getting bogged down in all the news and analysis. He's just watching how the market is behaving.
Exactly. And he has a philosophy of always having a position on. He doesn't like to sit on the sidelines.
He likes to be in the game.
Absolutely. And he's not afraid to take risks. He has this crazy story about how he made a killing on Argentine peso puts right before the country's devaluation.
Wow. So he was basically betting against Argentina. And he was right.
He was. It just highlights the potential rewards of volatility trading if you can get it right.
All right, last but not least, we have the volatility trader. What's his deal?
He works for a major bank, but he has a lot of autonomy. He's basically a lone wolf making macro bets within a large institution.
Interesting. So he has the backing of a big bank, but he's also got the freedom to make his own calls.
Exactly. And his entire focus is on volatility, understanding how it's priced, how it fluctuates, and how to exploit those fluctuations.
It's like he's found his niche.
He has. And he has a really interesting perspective on the role of experience in trading. He argues that experience should trade at a premium.
Why does he say that?
He believes experience gives you a deeper understanding of market cycles and crises. You've seen these patterns play out before, so you're better equipped to recognize them and anticipate what might happen next.
It's like having a mental library of past market events that you can draw on.
Exactly. He also believes the market's short memory is a source of opportunity. People forget the lessons of the past, which allows those who remember to exploit those recurring patterns.
It's like history rhyming in the markets. I like that.
Yeah.
What else?
Well, he shares a story about how he profited from buying those Argentine peso puts, too. Seems like he has a knack for anticipating those big market dislocations.
So he's a bit of a chaos trader.
You could say that. And he's a great example of how you can find success in the markets, even if you don't fit the traditional mold.
That's inspiring.
Absolutely. And his story, along with all the others in Inside the House of Money, really underscores the fact that there's no one right way to trade global macro.
It's about finding what works for you.
Right. Your own edge, your own strategy, and never stop learning and adapting.
Well, we've covered a lot of ground in this deep dive. It's been fascinating to hear about all these different approaches to global macro and the people behind them.
It's a complex world, and this book does a great job of peeling back the curtain and showing us what's really going on.
I'm curious, what does Drobny himself say in the book's concluding chapter? Does he offer any final thoughts or advice for investors?
He does. He emphasizes that the book isn't meant to be a blueprint for success. It's more about understanding the different ways that successful traders think about the market.
So it's about understanding the principles behind their success.
Exactly. And then adapting those principles to your own unique circumstances.
What are some of the key themes that he highlights?
Adaptability, for sure.
Yeah,
The macro landscape is always changing, so traders need to adjust their strategies.
that makes sense.
What else? Risk management. He stresses that every trader featured in the book has experienced significant drawdowns. You have to have a clear understanding of your risk tolerance and protect your capital.
Don't get greedy.
Right. And he also doesn't try to present a single right way to trade global macro. He recognizes that there are many different paths to success.
So for our listener out there, what's the one piece of advice you'd give them based on the insights from this book?
Be a student of the market. Never stop learning. Never stop asking questions. Never stop challenging your own assumptions.
That's great advice. The world of global macro is complex and always evolving. The more you understand it, the better prepared you'll be. Well, on that note, I think we've reached the end of our deep dive into Inside the House of Money.
It's been a pleasure exploring this book with you. I hope our listener has enjoyed it as much as we have.
If you're interested in learning more about global macro trading, I highly recommend checking it out. It's a fascinating read.
And until next time, keep learning, keep exploring, and keep pushing the boundaries of your own knowledge.
Thanks for joining us.
Yeah, it really does feel like we got a peek behind the curtain to see how these global macro masters operate.
Exactly. So insightful. Now, before we wrap up, I'm curious, does Drobny himself, in the book's conclusion, does he offer any sort of overarching takeaways, maybe advice for investors or people who are interested in this world?
Yeah, he does. And I think one of the most important things he says is this book isn't meant to be like a paint-by-numbers guide to success in global macro. It's more about understanding the different ways that people approach the market and the common threads that run through their experiences.
Okay. So less about specific strategies and more about the mindset.
Exactly. And, the principles behind their success.
Got it. So what are some of those common threads that he highlights?
Well, he talks a lot about adaptability.
Right.
The macro landscape is always changing,
Right.
and traders need to be able to adjust their strategies to keep up with that.
Yeah, that makes sense. I mean, we've seen how these traders have adapted to everything from the '87 crash to the Asian financial crisis.
Right. And the rise of China, too. I mean, that's
Yeah.
been a huge shift in the global macro landscape.
Absolutely.
Yeah.
What else does he talk about?
Risk management. I think that's a huge one.
Yeah, that's come up a lot in these conversations.
Yeah. He emphasizes that all of these traders, every single one of them, has experienced some pretty major drawdowns in their careers.
They've all had their moments of doubt, their setbacks.
Yeah. And they've all learned that you got to have a really clear understanding of your risk tolerance, and you got to be willing to protect your capital, even if it means taking a loss.
Got to know when to fold them.
Exactly. You got to know when to walk away. And I think what's also interesting is that he doesn't try to present this single right way to trade global macro.
Right. There's no one-size-fits-all approach.
Exactly. He recognizes that there are many different paths to success.
Yeah. And what works for one person might not work for another.
Right. It's about finding what suits your personality, your risk tolerance, your intellectual curiosity.
Finding your own edge.
Yeah. And I think that's what's so great about this book. It really does give you a sense of the diversity of thought within this world of global macro.
So based on all these insights, what would be your one piece of advice to someone who's interested in exploring this world?
I'd say be a student of the market.
Okay.
Never stop learning, never stop asking questions and never stop challenging your assumptions.
Yeah, because the world of global macro is always changing.
Yeah.
It's complex. There's always something new to learn.
Exactly. The more you understand, the better equipped you'll be to to navigate its twists and turns.
Well said. Well, I think that about wraps up our deep dive into Inside the House of Money. It's been a fascinating journey.
It really has.
And for anyone out there who's intrigued by this world of global macro trading, I highly recommend picking up this book. It's a great read, full of insights and stories from some of the best in the business.
Absolutely.
Thanks for joining us on this deep dive. And until next time, keep learning, keep exploring, and keep pushing the boundaries of your own knowledge.